we're not going to win the bidding war, right? So what we were thinking about was like we call it flanking technology, right? Because in real life, let's put David and Goliath in a ring. Most of the time, Goliath is going to win against David.
Welcome to Scaling Without Breaking podcast, the show for startup leaders who are done winging it and sick of everything being a bottleneck. Your team's growing, the cracks are showing, and what got you here is officially breaking. Each week, you'll hear raw stories, sharp strategies, and real talk from founders, operators, and advisors who've scaled through chaos and built companies that run without constant firefighting. If you're ready to start leading like a CEO and move beyond just surviving, you're in the right place. Here is your host, Roland Siebelink.
Hello, everybody. Welcome once again. The Scaling Without Breaking podcast is there for startup leaders done winging it, ready to lead like true CEOs. Today's guest built a company, hit €1 million in revenue in under a year, raised VC money, of course, and then, just walked away. Years later, his investors called him back. He found a shell of a company remaining. He completely rebuilt it, and just when he could have coasted, he made a bet that puts him in competition with a unicorn by refusing to compete with them at all. Meet Daniel Hanemann. He's the co-founder and CEO of WunderTax. Welcome to the show, Daniel.
Hi, Roland. Thanks for having me.
Okay, so Daniel, let's dive right in. Your competitor, Taxfix, has budgets that you cannot match. Your answer was to stop competing on their terms entirely. What made you see the different embedded play, and what does it mean?
So, I do believe that, small companies are very powerful in, the reason why startups exist in the first place is because they're new innovations, maybe on a macro level, or even like in an own technological level.
Right.
You can build and challenge incumbents. But the thing is, I think my story is a bit different in that sense, because when I came back to WunderTax, it was already an established company. And we competed head on, or previous management competed head on with the unicorn Taxfix, right? We have essentially the same product. We do tax software for individuals in Germany.
Yeah.
And Taxfix has bet the whole business, or their initial thesis was, we do everything mobile. We had more of a desktop approach, right? Because we said back in the day, this is 2016, we said, why would you do it mobile, right? It was something as important. And I think that was like an inherently millennial thing to say because Gen Z doesn't agree with that. And the numbers prove it, right? Taxfix was wildly successful, raised a total of 300 million euros. And of course, their annual budgets vastly exceeds ours, like you just said, in marketing. So, we had to really think about this. We had to think about, okay, are we going to compete with them, because our budgets are like a 6-digit amount, and their budgets are more like an 8-digit amount euros. How are we gonna go head on? Are we gonna go into a bidding war against them? And like when it comes to, and it's not even just Taxfix, right? There's an incumbent player called Wieso in Germany who's also, their revenues are double of Taxfix, right? Taxfix is like the unicorn. You can Google it, raised a bunch of money, but the real champion in the market, the real market leader is Wieso, and they make double the amount of revenue. So you have to imagine us, the small little player, competing against them. We're not going to win the bidding war, right? So what we were thinking about was like we call it like flanking technology, right? Because in real life, let's put David and Goliath in a ring. Most of the time, Goliath is going to win against David. But how did David win, right? Like in the Bible, David had a slingshot and used that to win against Goliath. Now, of course, like we're not out to defeat the big competitor, but we are thinking about like, how can we carve a niche for ourselves? And we were thinking, okay, we looked at our assets. We looked at our technology. What have we built? What can we build with ours? And what we've seen is our tool is inherently API first. So we've also when we launched a mobile app, we built a front end, which is the app, on top of our API. And then we asked ourselves, like, why not just open the API and basically ask other companies if they want to offer tax filing services, right? So we started approaching other companies, asking them if they want to do pilots. Let me tell you, it's been a grind because one of the hardest things to do is get into the product roadmap of other companies.
Yes,
right?
of course, yeah.
From a push perspective, if they ask you, like, it's really easy, right? Because if they have the need, but if you want to push yourself into a product roadmap, you're going to have a bad time. So it was a grind. We have made some connections in the market, but ultimately we now have 2 pilots coming up.
Can you reveal what kind of providers you are working with for this embedded strategy?
Absolutely. So the thing is, those 2 pilots that we're working on are in the tax space themselves. So that's what we found as well, because so they do a little bit different. They provide tax services, or let's put it more like accounting services.
Yeah.
But they don't want to deal with, like the nitty gritty. So they want to concentrate on the workflows themselves that they provide their customers, but they don't want to build stuff like rental income or depreciation on your rental objects. These nitty-gritty tax services or these nitty-gritty tax forms are a nuisance to build, and we've built them already, so why reinvent the wheel?
So in a way, you've not only come back to revive the business, but you also had to change the entire business model, almost going back to like pre-product market fit in a way. Would you say that's correct?
Well, not for the whole company. Right?
Okay.
Like we have a running business. We process about 100,000 tax returns per year for the end consumer, but the reality is that we've seen and are seeing a plateau, because for anybody who has some affinity to Germany, when you listen of the listeners here, you will know that there were massive amounts of ads promoting tax returns in Germany, because in Germany you get an average of 1,000 euros back. But the biggest difference with the US is you don't have to do your tax return in all cases. So a lot of people if they don't have to do their tax return, a lot of people don't do it, even though they have back pay. So every year, it's about 10 million people that don't do their tax return, with an average refund of 1,000 euros, which is, a lot of money.
Yes, exactly.
And so in Germany, what we've seen is, like, there was massive marketing battles being fought. And everybody knows this. Everybody knows they should do a tax return, right? Our new customers are all people starting with their first job, or expats coming into Germany. But it's not a lot of people that have never done a tax return before and now suddenly believe that they should do a tax return. That's not happening, right? Like,
so in a way, strategically, it's more like you have your existing business, but you see that plateauing. So now it's like building your second line of business on the same platform, on the same technology.
Exactly. Yeah. I call it a soft pivot with a stable launch pad.
Sounds like move and break things, but on top of stable infrastructure, right? Like
that's how we like it in Germany.
Exactly,
a little bit more stable on the stable support.
How do you change that with a team that's many of which will have been there a few years? Maybe you had to change a few people, but how do you actually get people to buy into a pivot like that?
So I think maybe I would answer this question not even with a pivot, not just in connection with the pivot, but also in connection with the whole restructuring that we've done in the last 4 years. In the last 4 years. So the thing is, I mean, my startup story is not very conventional, right? When I founded in 2016, it was the typical startup story with growing and raising angel investments. When I came back in 2002, it was a different story, right? Like, I came back, it was about 25 people in the company. And frankly speaking, there was a lot of slack in the company. And when we downsized to a serviced office with shared facilities and people taking care of it, our office manager, who was also the customer service person, who was also working on product, told me, but my job is like a third of my job is gone. And I was like, yes, that's the point. You
Right.
shouldn't be ordering toilet paper. Like, we should hire somebody to do that. And he was like, but I like ordering toilet paper. Right? I mean, this is the most simple example of this. And then people hate change. I think that's very important in restructuring processes.
Yeah.
And I think the way I do it, or I did it, is transparency. I try to communicate. I don't like, the whole radical transparency movement kind of thing, because sometimes it's just an excuse to be an asshole. But I like to share my thoughts, right?
Yeah.
Like, I like to share my train of thoughts with anybody who asks. Why do we do what we do? Why do I make these decisions? Because in my career, I've always had this. Startups are messy, and people are like, oh, love to. I mean, it's a cliche. People love to talk bad about their boss behind their back, and I get it, right? Like, some decisions just seem idiotic, just seem like mismanagement. But the truth is, the inherent truth of being a founder is you're juggling so many things, you're managing so many stakeholders. It's really, really hard to please everybody. So you're going to be an idiot for somebody. And I think the only way for me to mitigate, that I had to mitigate this, is to share why I did the decisions that I wanted to do and that I had to do. And the people that didn't like them, and I think this is a little bit my secret sauce, how the whole restructuring went so well, was because I was so transparent in my train of thought and my decision process. People had the chance to say, I don't agree with you. I'm not going to be part of this.
Yeah.
Right. So we actually, we did have to let a few people go in the whole restructuring process. But I would say we got out of it pretty well without, because you always say, like, we're now 15 people. Back then it was like about 25.
Yeah.
And you always say, like, if you have layoffs, you have to count with 10% collateral. We barely had collateral. The only person that quit was because of the toilet. Eventually, because of the toilet paper. He was the only person that quit. Not the cult. It was not his culture anymore. And that's exactly it, right? But everybody else, we wanted to keep him, but it wasn't his culture. So, like, no hard feelings there. But everybody else who we had to let go, that were, part of the restructuring, I tried to be as transparent as possible, tried to be like, share my train of thought, and it worked well, is what I can say. It worked. And that's how I would say also, like, going back to your question regarding the soft pivot, I would always try to explain this without, especially to your employees, without the grandiose, startup pitch. Be vulnerable. Explain to them why you have, like, what are the factors that led you to this decision.
You're just about 15 people now, down from 25, you said, I think, right? So, but you're doing a lot of stuff with that team, right? 2 business models, B2C that needs still customer acquisition skills, B2B2C needs the partnership skills you're building up right now. How much of attention are you putting into that team every day?
Well, we have a very talented. I have a very talented management as well.
Good.
So I do have the privilege that I'm at a position where I'm not too involved in the day-to-day anymore. I'm a strong COO, strong CMO, strong CTO, of course. I am able to also manage, the outward-facing stuff. So the stakeholder management towards the outside. And of course, we have, our Mondays are hectic. We have the weekly team meetings, weekly all hands. Although it's called weekly, it's more like bi-weekly. What makes WunderTax a quite nice place to work at is I think everyone's kind of involved. Everyone knows the other person. I mean, this is inherent in small startups. The chasm, and every founder who's been there will know this, right? The productivity of each additional person vastly, like drops as
Exactly.
a whole, right? Like as an
Becomes more of a
organization, right?
drag than a boost, right?
Exactly, like every single extra person reduces the per person productivity, which
Mm-hmm.
essentially is a really really hard thing to manage, right? Like that's why thousands of management books are written every year. But the thing is, like, it's with this size, it's extremely fun because things get done very quickly.
You mentioned in our prep call that you had also gone through a few M&A activities where you learned that the finances are one thing, but that the strategic fit is far superior as a
Yeah.
criterion. Can you expand on that a little bit?
Yeah, absolutely. So I think for all the founders that are looking to sell their company or thinking about it at the now or in the future, what I've learned, yeah, is that companies, you don't sell a company.
Mm-hmm.
You get bought. And there's a subtle but very meaningful difference here, because when I first got exposed to this world, I always thought like, oh yeah, it's a, like it's like a bazaar.
All right.
It's like or maybe a more sophisticated example, it's like the stock market. There will always be a buyer at some price point. Except if it's zero, right? But like, you know what I mean, right? There's always going to
Right.
be a buyer at some price point. Um, and that's not the truth when it comes to startups or private markets
Mm-hmm.
in general. So the thing is, you get bought by a company because the company wants you. If you're not part of a strategic project or a strategic fit, etc., they won't take you even for free.
Right. Right. In that sense, it's maybe more like the dating market than like the stock market.
Yeah, that is a very, very good analogy. Yes. I mean, the stock market is liquid.
Oh,
The
let's
dating
not go
market and
there. Come on.
private markets.
I can see you are trying to surreptitiously insert your talents as a stand-up comedian now, right?
Yeah, that was once upon a time. Yes.
Exactly. Well, but since you did do some stand-up comedy, and since you're the only one of German heritage that I know that has any experience in that field, what did it teach you for being a founder and a company leader to have been in that stand-up comedy field?
Yes, I have a very, very clear answer to that. Is everyone's a narcissist.
Hmm.
Some more, some less. And why am I saying this? Is because you might think that you are embarrassing on stage. You bomb. You may have an awful show, and you're ashamed to the ground, and you don't like. Oh man, it's the worst, right? Like if you had a bad show, you go off stage, and people won't even remember.
Right?
Right? Oh, of course. Like if you're really bad, like if you're like negative bad, that's something else. But like if you're just like bad, like nothing's gonna happen, right?
Right.
And I think that was my main learning. Like everyone's more embarrassed themselves in the day to day life than anybody will ever be embarrassed about you,
Hmm.
right? So what I'm trying to say is, if you get rejected, if you have a bad presentation, if you have a bad pitch, if you have a bad, there's always another show. There's always another stage. There's always another, audience. And there's always another investor you can pitch to.
I was going
And
to say that sounds like a VC fundraising round, right?
yeah, this sounds a bit strange, but like if you don't do anything ridiculous, you could like a bad pitch is never going to be so embarrassing that you'll be out of the picture. And it's the same thing with stand-up comedy.
So we'd like to get a little bit personal at the end of the show as well, Daniel. So you were born in Hong Kong from a German father and a Taiwanese mother, right? So big multicultural background. How has that shaped your life?
That has shaped my life in a lot of ways. Like a little bit background information. I grew up trilingual. My dad spoke German with me. My mom spoke Mandarin with me.
Yeah.
Hong Kong is natively Cantonese.
Yeah.
Because my mother didn't want me to mix the two languages, she wanted me to only speak Mandarin.
I see.
So, because it is very different from each other, but you do mix it, especially because like my exposure wasn't that big. My classmates were all speaking English or German.
Yeah.
So what I had was like, I grew up in a place where basically I was the perpetual expat kind of thing. And even nowadays, if I have a Hong Kong passport, and if I meet people from Hong Kong, it's very difficult to because just the language thing. I'm not really Hong Kong, even though I lived there for 18 years. It's the same thing when I meet people from Taiwan. Like I speak the language, but I've never lived there.
Right.
And it was at the beginning when I moved to Germany, it was the same thing, right? Like I didn't really relate. It was all very different for me. And I think that really shaped me intensely by being like my adaptability, I would say. There's this word called third culture kid.
Yeah.
And this third culture kid was told to us when we were still in school. They were like our teachers would be like, "Oh, you're third culture kids" and stuff like that. And we all were like, "No, we're just normal."
As in almost like a derogatory sense.
Well, we thought, we were like, why are you putting labels on us? But like once I actually like moved abroad, or for me abroad to Germany, it was I understood. Yeah, we are a third culture. Like I meet people that went to international school in, I don't know, Spain, with like Central European parents, and I relate to them, and I have nothing to do with them like culturally, from the cultural background. But like we're friends because it's that we have that common ground of being a stranger wherever.
Almost like native expats, or what they call Erasmus babies in Europe, right? So
native expats is a good word. So I think what that taught me was a lot like adaptability, and I'm very thankful for my parents that they've given me so much cultural enrichment.
Daniel, where can people reach you or find out more about you? Anything they should download in particular from WunderTax?
Well, if you are a German that has to do their taxes, or you're we service expats as well. We have an English tool. Please try out WunderTax. You can reach me on LinkedIn for startup advice. If you want to just spar, send something over. I'm happy to connect. I think LinkedIn is probably my most.
And we'll put your contact information in the show notes. And of course, if somebody knows me and doesn't know Daniel yet, I'm always happy to provide an introduction as well. So with that, Daniel, thank you so much for coming onto the show and going through all your wonderful WunderTax and other experience.
Wonderful.
And amazing and wonderful, exactly. And stay tuned, please.
Thank you so much, Roland.
Of course, it's been a pleasure.
The Scaling Without Breaking podcast requires more than a conversation. It takes action, research, and collective wisdom. If today's episode resonated with you, we'd love to hear your insights. Join the conversation and help us shape the future together. We'll be back with more stories, strategies, and real-world solutions that are making a difference for everyone. In the meantime, be sure to subscribe, rate, write a review, and share it with someone you think would benefit from it too. Thanks for listening, and we'll see you on the next episode.